Hey guys, this is Market Update. It's really important to stay interested in Bitcoin and crypto right now. It'd be easy to take your eye off the ball now that the ETFs are done, but the rest of this bull market is where the real expansion comes, in my opinion. We have a halving in less than 3 months. We have rate cuts coming down the line and potential easier policy from central banks. I'm going to show you the data for that and why it's important for risk assets like Bitcoin and crypto. I'm going to show you how money is rotating in the market, extremely healthy and important for the bull run. And then this research piece by Pantera looking at Bitcoin versus altcoins. Right now, BTC is going through this rotation of capital. The price that we get to during this, the low price or the consolidation price, is the springboard for the next bull market. So I'll explain that right now. The ETF trade was amazing. When the Grayscale won the case and BlackRock applied, it was a done deal already, and that was a 100+% trade. It just got to this 50K level that I drew on the chart, not quite there, but as we come down, we're going to consolidate here around this level. Now, we might go lower, we might come to some levels. That doesn't matter, right? The price doesn't matter. It's the springboard that we need to go to the next phase of the bull market, because what's happening now is a massive rotation. What you're seeing is Grayscale have huge outflows coming into BlackRock, Fidelity, Bitwise, Invesco, right? Franklin. These are real long-term capital invest. Yes, there's going to be some speculators here, but you're seeing these institutions bring this onto their clients who are going to tuck this away, right? These are much longer term investors. The Grayscale trade was buy early, rotate into the ETF, sell out. Well, that's what they're doing now. So those traders have traded it fantastically. They were trading at much lower levels, 3, 5, 7,000, and that's their trade. That might have been their one hedge fund trade of a lifetime, and they can retire now. Where that money's going in is BlackRock, Fidelity, longer term investors, right? They're putting it into these investment houses. That's important because whatever price that eventually washes out at is the support and resistance level for the next phase and expansion. In the next bull market, as we get the drawdown, this level could be the next level where it gets to in the next drawdown after the bull market, because we know Bitcoin draws down 65, 70% after its all-time highs. This is very, very important as a trading level, and so we need to keep an eye on this. The price doesn't matter because the next phase is the real expansion. That's what we're trading here. Whether it's 40 or 35, totally irrelevant. If you're a trader, check out Bybit, up to $30,000 deposit bonus on Bybit. Check the link down in the description for the details. This report from Pantera Capital shows us how Bitcoin and altcoin outperform at different times in each of the expansion cycles we've had for crypto. So phase 1, Bitcoin outperformance. Phase 2, altcoin outperformance. And you can see that here, around 60 to 70% through a bull cycle, altcoin market share spikes up fast. So what we're seeing is that in the initial stages, Bitcoin will grow and outperform altcoins generally. There's going to be some altcoin outperformers, some underperformers, but generally in terms of total market cap, Bitcoin leads. And then after the expansion, so we're coming into the halving, the real expansion for BTC, that's when altcoins really tend to follow and even outperform BTC in terms of they taking market share away. So not just the existing altcoins, but as we know, during a bull market, that's when all of the projects and teams that don't have tokens yet start launching their tokens. And so they come at 1 billion, 5 billion, 7 billion market caps, right? And that's just new capital that's been created, right? And that comes in and broadens out the crypto universe, adding value. So it's not the existing ones that potentially take value. It's those plus just a much longer tail of assets that now exist. How to play this? Bitcoin still has a lot of performance. Altcoins will as well. Now, this mostly is Bitcoin and Ethereum, to be totally honest, because they take up even now 70% of the crypto market cap. So the data is going to be those two, right? The others, like almost irrelevant, but obviously growing a little bit. This is Bitcoin and ETH. And of course, a few others that can generate, some capital growth as well. What they find is that the outperformance is so extreme that altcoins have actually outperformed Bitcoin across the length of both cycles. So if you just invested in altcoins, you would have outperformed BTC. The risks here as well is that which ones, right? Because many have underperformed, which means you need a broader portfolio. You need to diversify. Then you have issues of where do you keep those coins? How much does it cost to keep them on blockchains? Are you going to keep them in centralized exchanges? All of that stuff. We don't have a crypto index yet, which we need. That's just not there. And so where to place your money? Again, what they're talking about mostly is Ethereum, which has outperformed BTC and generally grown in value versus it through these last 2 cycles. And then, of course, a couple of others that just are slowly growing in their market caps as well. As an investor, it's very, very difficult to play that and have all of these, and almost irrelevant as well if Bitcoin, ETH, and a couple of other of your picks are just going to have these big expansions. It's kind of all you need because you're going to outperform all other asset classes anyway. You don't have to go extra risky to try and diversify across loads. They think that the altcoins that will outperform are those that have strong unit economics, just as one would expect in other asset classes. They're talking about Ethereum here again, right? Because if we look at Ethereum, it earns billions of dollars in revenue, and then you're going down to Bitcoin, which doesn't pay any revenue. Then you're looking at Tron, Lido, Uniswap. Now, these DeFi protocols tend to underperform ETH if you look at the data as well. So basically, they're talking about Ethereum here, that they think Ethereum is going to outperform, which is, not out of the realms of possibility. So overall, in this cycle, Bitcoin is up 2.8%, altcoins generally 1.7%. So trying to get the perfect trade is impossible and a waste of time. This asset class is just growing. And so having access to it, having exposure to it, is going to get you very good returns, maybe in the next part of the cycle as well. I also want to highlight here how almost impossible it is to try and time this and outperform. So if you're looking at these stages, you're looking at a massive expansion for Bitcoin, which leads altcoins, which then outperform, but then Bitcoin tops out and essentially altcoins stop outperforming and they just go down in market share again. To try and actually time that, if you're not a professional trader who's working 12 hours a day looking at this, is virtually impossible. Step back, calm down. There's a huge expansion coming. We just need to have our exposure, and that's enough. There's lots of returns to be had. Are we going to get the expansion in this cycle like we've had in every previous cycle? The global tightening cycle has turned. These are the number of rate hikes. We are now seeing rate cuts starting to come in. This is the start, and potentially this will carry on into a rate cutting cycle. That's beneficial for Bitcoin and crypto, potentially not the stock market, but Bitcoin is not stocks. Core PCE inflation, as you can see here, is around 1.9%. The Fed targets PCE. The Fed historically focuses on core inflation. The Fed explicitly mentions 3-month and 6-month annualized trends. The 6-month annualized trend of core PCE is 1.9%. Their target is 2%. This is the New York Empire State Manufacturing Index coming in recession. I mean, this is as bad as the pandemic. So if they just keep things tight, eventually something's going to happen where they have to really cut fast. You might hear the Fed saying, we don't have to cut as fast as previous cycles. We can keep things higher. This is rhetoric. Okay, they're trying to manipulate behavior. We know that every single time what happens is that the market in white understands that the Fed is going to cut and starts pricing that in the real rates. That comes down and crosses through the Fed's funds rate, the official rate, and then a period after, the Fed start cutting. And that's happened already. The market has now decided. We had a false break here. The market thought we were done and started pricing it in, and they were too early, and things inflected up again. And that's when we had that kind of second long bear market bounce. But here we're starting to price it in again, and it looks like the data is showing that potentially the Fed are going to have to start chasing this down. Bitcoin's price is not overdone, in my opinion. We're still towards the bottom end of its trend rate of growth. Orange line is trend rate of growth. Anything under that is automatic accumulation, in my opinion. The trend rate of growth is also accumulation because the network is just simply growing over time, and so it has a rate of growth. What we have to trade potentially is when monetary policy from banks, central banks, gets overdone to the low side and potentially to the upside. They're the real areas to trade around. So as we come down here towards the bottom end, you accumulate. If the price gets anywhere up here, that tends to show the Bitcoin price is kind of way overdone in its price in relation to its trend rate of growth. So for right now, we're kind of at trend. So still accumulating, but whenever we do get up here, whenever it happens, then you can make some decisions. For right now, we still have that whole phase ahead of us. And so it's an exciting time. If you're a trader, check out Bybit, 30K deposit bonus via the link down in the description below. I'm James, this is my ZD. Cheers for watching, and I'll see you in the next one.